Welcome everyone, this is Thomas from TradeWin. In this video I will present you my trend following strategy based on Fibonacci retracement level. So the objective of this video, which might be quite long, but don't worry, I will put everything into the timeline of the video. You can see that in the description of the video, so you can click and go wherever you want. In this long video. The objective for me is to show you how I struggled for some time before reaching and before getting some prop firm accounts. So yeah, I won't go into the details, but I tried so many challenges and I burned quite a lot of them, like many dozens. During a 2-year period, and now finally I am 400k funded at FTMO and waiting for 1 million from the Prop Vault, which is the new name of bespoke folding program. If ever they gave me these accounts. So let's get directly into the strategy, but before that I want to give a short introduction about trading in general, so you could listen to that or switch directly to the presentation of the strategy, but I believe that this 2-year experience I got may help other people. So I will first present to you my beliefs about the market, because it's important to see what a trader believes in order to understand how he trades. And in fact, you never directly trade the markets, you always trade the beliefs you have about how markets work. Okay, so these are quite a few of my beliefs. The first one, you may agree or not with that, but that's how I came up with building my strategy. So that's kind of introduction, in fact. So my first belief is that price action is 100% controlled by high frequency traders and institutions. When you see millions and billions of dollars exchanged per day on many markets, this can't be manual. Okay, there are not people behind desks pressing buy and sell buttons. So everything is already like algorithms battling one against the other. Another one is that saying good price action trends and retraces before trending again. And that's the core of how I built my strategy, because it's basically a trend following strategy. Then at any time, bulls and bears, so the ones who want price to go up and the ones who want price to go down, fight to move price in their direction, right? And lastly, futures price action reflects more accurately what's happening on the markets, right? So based on that, here is how I declined that into my strategy. So because everything is controlled by whales and institutions, I must follow the movements they initiate, right? This is like logic. Concerning the trends and the retracements, those retracements are good entries in order to get into the trend, into the movement generated by the whales. Okay. Bulls and bears fight at any time, and there is always a battle between them. I believe that studying how the price action retraces tells me at any time who is winning between the bulls and the bears. And finally, concerning futures, this means that I basically take my trading decisions based on futures price action. But yes, as many of you, I trade finally CFDs via prop firms. Okay. So that was something important for me to share with you. Next slide is about what I learned the hard way during those 2 years I have been trading. Yeah, I burned like 50K of challenges for nothing. So thank God it wasn't more than that. It was everything I had left over, but that's fine. I'm recovering from this. So my concept is that trading is always attack and defense. I don't attribute to myself this quote. You have maybe already listened to that in the sports, maybe in football or rugby. Offense wins games, defense wins championships. And this quote is attributed to Paul Bryant. Okay, so attack mode is the basis of your strategy, right? And the defense concerns the risk management. And as you can see, I have much more points on risk management instead of basically following the strategy, which is only the buy and sell engine. What makes me buy or sell any asset, right? So what I learned is that money is made in the waiting, holding positions while asset trend. So you have maybe already heard the quote, less is more and blah, blah, blah. But reality is that trend following, especially for traders who have jobs, who can't day trade, okay? Trend following is compatible with having a job, trading in the higher time frame, okay? That's completely possible. And everything is made while you are waiting, right? Another one is if your entry is good, price might expand and then retrace exactly back at your entry. It doesn't mean you are wrong, okay? So don't get stop loss to break even too soon. So this is applying for trend following strategies. When you are day trading, maybe you cannot afford to have huge retracements because you are only scalping, okay? I'm not a day trader. I don't like the philosophy. It's hard for me to bear the stress behind it. So I'm more comfortable with longer term trading. What about the risk management? So first you need to take risks because if not, then nothing happens. Okay. One trade can effectively blow up everything you did for a long period of time. So every trade you take could completely blow everything you did if you don't pay attention to or if you are undisciplined. Overtrading and revenge trading can be temporarily cured switching to higher time frame. That's what I did when I first got into trading. As anyone, I was looking at the charts during many hours, hoping to understand any tick. Unfortunately, that's what traders on YouTube tell you, that day trading is the key. Yeah, quit your 9-to-5 job. Everything will be fine. No. Okay. If you want to get into trading, please try to avoid day trading and short-term trading when you are starting, because psychologically you are not ready. Of course, it's exciting. That's why people get into this. Okay. Beside the potential of winning a lot of money, that's really exciting, right? But as some say, good trading is boring trading, right? So yeah, The next one is there will always be another opportunity. Don't FOMO, fear of missing out. Okay, if you see everyone taking a short or telling you, yeah, this is the trade of the century, etc., don't be bothered. There will always be another opportunity. Okay, there are so many markets. They are always open. Okay, especially futures. Now you have either crypto, which is open during weekends. Okay, so you will always have more opportunities. And my preferred one is that I must be able to survive 10 losses in a row. Okay, that's the key of my risk management. Once we said that, there are some rules. And one is based on patience, which is that I'm forcing myself to wait for the candle close on whatever time frame I'm trading. Okay, so this means that I don't anticipate fair value gaps, reactions. I don't anticipate a move. I don't anticipate the reaction to a certain level. Okay, I just wait. That's maybe the hardest rule for me to follow. And at every time, I should be fine with having all my positions wrong. As I told you, I should be able to get 10 losses in a row. Okay, so in live trading, funded trading, like I'm starting next week, I will take 0.5% risk per trade. In challenges, it's a bit different because the objectives to reach could be like an annual objective for any, I would say, realistic trader. Okay, this will be a realistic objective between 12 and 15% per year. Okay, but everyone wants to win challenges rapidly. Okay, so they take a lot of risks. So in challenges, I risk more, 1% per trade, and maybe sometimes a little more when I'm in profit, because the objective is quite huge, especially when you want challenges to be passed fast. Okay. Fine. I'm continuing futures charts. So why am I using future charts? That's because executions on futures exchanges are centralized. Every actor plays in the same field, whatever his size is. Okay? So that's really important, contrary to CFDs that are not centralized, whose execution, is not centralized at all. And CFDs can have some weird moves compared to futures. Okay, so for example, here you have on TradingView a screenshot between the Japanese yen futures. You have only two kinds, futures and the E-mini one. Okay, which is just a different lot size. And here all the CFDs linked to the same pair on all different brokers. Okay, so I will definitely choose to work with futures. So that was the huge intro. Okay, it was like, yeah, we are 14 minutes in the video. Let's dive into maybe the part you are waiting for, which is the presentation of my strategy. So the time frame could be whatever you want. For challenges, I did that to the 15 minutes, but in live funded accounts, I'm starting next week. I aim to do that on the 4-hour time frame. Okay, so basically it's based on Fibonacci retracement. We'll see that now. And the asset universe can be whatever you want, but I can say that the best asset for now is the positions, the best rewarding positions I had were when I was studying both dollar index and the Euro-USD pair. Okay, but in theory could be applied to anything, to indexes, forex, metal, oil, and Bitcoin. Okay. Why I'm not mentioning other crypto? Because they are not relevant in my view. I could have add here gas, natural gas, because why not? And these are the most traded metals, right? And as I said, trade ideas are obtained from future charts. So an important concept into my strategy is the OTE zone strategy. OTE as optimal trade entry. Okay, clearly what this is about, it's when you take a leg, a price extension, okay, from a low to the high. So you can do that on TradingView using the Fibonacci retracement tool. Okay, you take the low, you take the high, and what you are selecting is the Fibonacci retracement. So here is half of the extension, okay, and the area between 61.8% and 79%, okay, is what is called the OTE level. Okay, so whenever in this video I'm talking about OTE zone, it means exactly this zone of the retracement. Okay, so this is here a bullish leg. Okay, so I expect price to come back into this zone if the trend is up and to continue going higher. Okay, that's sane price action, as I said. Okay. I told you also that at any time I believe that there is a long-short battle. Okay, what does that really mean? So I took from this low to the high the Fibonacci extension, okay, right? And then I see price going down. That's fine. Price goes down until making a low. Okay, it might be here. The low doesn't change a lot here. So at any time, we have this leg up and this leg down. Okay, and depending how price action reacts into this zone or into the Fibonacci extension of the down leg, we'll have a clear idea of the bias. Okay, and that's the core concept of my strategy. How do I find if we are in an uptrend or in a downtrend? I see how price reacts to Fibonacci OTE zone. Okay, so what's my take here? My take here is to say that I see price going up, it goes down, that's fine. And if price bounces back from this zone, the probability we reach the previous high and make a new high is incredibly high. Okay, so whatever you want to do here, okay, you can add some ICT confluence into this zone. For example, if you have a fair value gap, if you have just a gap as here, okay, due to the weekend, okay. So here I see price coming back into the gap, okay, which is into the OTE zone. And I see price leaving again this level. So I assume that this could be a really good entry. Okay, so depending here, whatever strategy you use to identify a reversal, could be anything, an inverse fair value gap, a break of structure, anything, or just going out of the zone. Okay, you can see here, I see the gap. We don't close below the 79% retracement, and we seem to go higher again. So I'm entering at the close of this candle and targeting at least the 61% retracement level. Why this level? Because even if maybe after that we go up and then we go down, because this leg down becomes stronger than the leg up, okay, meaning that we have a change into the bias. We are now in a downtrend, okay. I expect price to come at least back to this level. So here, this is a 3-hour trade. If you wait a little bit to get out of the zone, entering here, that's a 1-hour trade, okay. So during challenges, I will pick up this kind of trades, which are low risk and high probability, okay. During live funding challenges and live accounts, I will just not put any take profit, because I will ride this wherever it goes. Okay, I'm a trend follower. Okay, I will explain that later into backtesting. So let's dive into what I just said, but with a scheme. Let's imagine price comes up, and then, okay, that's the first leg, okay, because after that it comes down. So from there to there, I do the Fibonacci retracement thing, and I got here the OTE zone, okay. That's an approximation, but just to understand that. The question is, when I see price going here, okay, do I get into a long position? The answer is no, because I expect price to come into this zone, okay? Effectively, as I told you, this is not a good entry concerning my strategy, okay? So price makes a new high, okay, you could say yourself, oh no, I missed an opportunity to enter the trade. Don't worry, there will always be opportunities, right? So we make a new high, which means that now I'm extending the Fibonacci retracement from this low to this high. So this updates the Fibonacci retracement zone a bit higher, okay? Same thing, price goes down. What do? The answer is nothing until I get into the OTE zone and I see a reaction from it. Oh no, again, I'm losing everything because I just made price action, just made a new high. I failed the opportunity to enter here. No, okay, you just protected your capital because I'm not following the strategy if I'm entering there, right? So this is not a valuable entry. But guess what? Now the price extension is from this level to this high here. I'm updating the Fibonacci extension. Again, that's an approximation, okay? But until price doesn't come into the zone, I'm extending the Fibonacci extension. We'll see that later, backtesting. Okay. Oh, guess what? Yeah, obviously I needed to show you something that works. Price goes down, reacts into the zone, and leaves it. Okay, that's a good entry. Okay, that's exactly and simply what my strategy is about. So what does that mean? I mean that I'm entering, for example, here, where is the stop loss? The stop loss is the lowest point here, because if I'm right, we will not ever come back into this zone, okay? And I can reach the previous high. This is what I would have done for passing a prop firm challenge, because you need to make profits, okay? So here is maybe a 3 or 4 hour risk. 3 hour, reward based on R, which is your risk, the distance here. Okay. In the real world, I would just continue to hold it, because if price reaches here and makes a new high, then it could go back down to a new Fibonacci zone, okay, OTE zone, and then go back up again. So you can do exactly the same when it comes to a downtrend. Okay, I will not do everything again, but that's exactly the same. Okay, I keep updating my Fibonacci extension from the low to the highs, okay, until price comes back into the zone and gives a good entry. Okay, that's what my strategy is about. Quite clear, right? 25 minutes into the video, we just finished the theoretical part. Now I would like to share with you what I told you previously with the Euro and Dix thing. So I'm quitting PowerPoint and let's get into my TradingView app. I don't know what to say, I don't know where to start. Let's pick a choice here. Let's go, okay? We have a local high, we have a local low. If price action is in a downtrend, okay, I'm expecting price to react into the OTE zone and then go down again. That would be a downtrend, okay? If I take this, okay, and I see price going like this, not going down again, I assume the downtrend is obsolete, okay? It's not a downtrend. So as I told you, I'm creating here a new, okay, a new trend, okay, starting here. It goes up. I think I'm going to do some replay. It will be easier. Yeah, let's do some replay. Okay, downtrend. So if there is a downtrend, price should come up right here and do something like making a new low. If this is a downtrend, okay? So I don't know where am I right now, okay? Let's say I even don't know what's happening before because I don't care. Okay, let's say that. So I'm coming. Replay speed 10 update per second. No, I want one candle each time. Okay, so there are candles here. Okay, so we can see price seems to bounce. So I'm following where we are. You see this? I'm following where we are. So I'm updating at each candle. I'm updating the Fibonacci extension from the low. So we are here. Okay, we are going down, we are going down. Okay, up, I take the wick. Okay, so I'm updating here. Okay, and what do you see here? Okay, you already see that we are respecting the OTE zone from this low, okay, to this high. The zone is here. Okay, it's not really readable. The zone is here. What do you see? Price comes back, okay, into the zone. There is a wick, but I don't care about wicks. I only work with bodies, okay. And we see a rebound from here. Okay, if you go to the lower time frame, you will probably find any fair value gap or something like that. Look at that. Okay, there is clearly a fair value gap here. Okay, and below that, you can see that this is clearly a reversal pattern. Okay, so the idea here is that even if I think the trend is down, because I saw that previously, I know I can target whenever I want For example, from here, I'm setting the stop loss below here, okay? And I can target the 61% retracement from the previous leg. Okay? You can enter whatever pattern you believe whenever you have reversed after reaching the Fibonacci, okay? In my view, this would have been a trade. So this would be in a 1 hour time frame. Okay, you can go back to the 15 minutes if you want to. Okay, I don't care. But the idea is that I went into the zone, I didn't close below it, okay, and I went out of the zone, out of the orange rectangle. So up, and I'm targeting this. This is a more than 3-hour trade. And it's like very possible that price, even if we are in a downtrend, comes back into this zone before continuing. So here I'm just following the, okay. I'm taking again the 4-hour time frame to go faster. Okay, this is a profit. You see that? And that's in 1 day. Okay. Oh, what do I see here? Exactly the same thing. I see price not closing above this, okay? And maybe it seems like we are now going down. So this could have been a nice position to take. I'm shorting this, setting the stop at this level, okay? And targeting the new low. This is completely a trade that follows my, I would say, strategy. This is if you believe that you are in a downtrend. Okay. It appears that I think it's a loss. Yeah, we don't care. That's a loss. Okay. I don't care. I made 3R here. I lost 1 here. That's fine. Okay. So it appears that DIX really follows this pattern of bouncing from Fibonacci levels. Okay. So now let's introduce the higher time frame, because you can do that on any time frame, as I said. So I take the daily or the weekly, whatever you want. Okay. Oh, this is a huge uptrend since October from the dollar. But where do we come from? Where do we come from? Okay, we can see from this huge downtrend here that we are reaching this level, right? But please look at what's happening here. Okay, I'm switching back because I don't care. I take the high, I take the low. Please see where price is reacting. Okay, you have the week. Okay, we never close above the mark, and then we get out of the zone. That's on the daily. Look at that, up. I'm taking this trade, and I'm ready to ride this one until whatever. Okay, so this is not a stop. Okay, I don't know if I would have been stopped here, probably, but I don't care. It's just maybe it would have been a loss, but the next one I will do exactly the same and entering like this. Okay, wait for the candle close. Okay, below, and then let's go. So what do I mean when I say I'm riding this? Take the replay. The replay where it is, select bar. Okay, I see this. Okay, so what I'm doing right now is that after my entry, I'm taking again the Fibonacci extension from the recent high to the low, and I keep updating it. So if I'm right, price could come here, okay, into the OTE zone, before going back again. Do you understand now why I say do not put stop loss to break even too early? It's because here my entry, maybe it's going in drawdown after being into like 1 hour profit. Okay, so I see price coming back and I say, oh no, I was in the wrong direction. Oh no, that's a pity. No, I don't care. Okay, what I'm monitoring is what's happening here. Okay, as long as price doesn't close above that, I don't care. Okay, I'm right. You see that? I'm in drawdown. Oh, what's happening? We are exactly into the OTE zone. Okay, and guess what? After reacting from this OTE zone, we made a new low, right? So this would have been maybe another great entry. Okay, maybe here I'm adding even more. Stop loss here. Stop loss here, entry here, and let's go. I'm riding this. I'm reacting again twice in a row from this Fibonacci extension, from this OTE zone, right? I could add more here. Let's continue that. Okay, price is going down. It's make a new low. I'm still in the trade. I'm still in the trade. I have entered the trade on Friday, 21 of October. Maybe 1 month later, I'm still in the trade. I don't care. I'm following the trend. And guess what? Now the Fibonacci extension zone is this one. From the high to this low. Let's see where it goes. Okay. I keep updating the zone. I don't know where it will go. I'm following the trend. Do you understand that? Okay. Maybe here we are bouncing whatever. If price is still in a downtrend, we should bounce back from here. You say, yeah, but look at that. You already had a 3-hour trade. That's awesome. Why would you accept price to come back into this and maybe get busted and having a loss? Okay, so you are right. At this level, when I see price action bounce back from here, this is where I go risk-free because my OTE zone is below my entry. Okay. Let's continue. Let's continue. So we made a new low. Let's update the zone. Quite easy. I don't do anything. Okay. Let's continue. Do you understand what I mean? And that's why day traders don't last very long, because they can't hold positions, right? Look at that, price is continuing to go down. Do I care? Absolutely not. Absolutely not. Okay, price continues, and guess what? Is that a problem? You can say, oh yeah, there is plenty of break-off structures here, maybe we are going to take these highs, everything. I don't care. Here, I'm certain to be risk-free. Okay? As a recall, I am, for now, at the, 5R, but now, price comes back, and I'm on only 3R. But I'm risk-free. Who cares? Who cares? No one cares. I'm risk-free in this trade. Sorry. And let's continue, blah, 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 blah. Guess what? Oh, price continue. And you can say, oh yes, look at that. There is here a liquidity level that is being swept. And then price comes back and targets the new low. Wow, this would have been a nice entry with a reverse fair value gap and everything. No. Sorry, guys. Sorry, guys. When you see this leg, okay, if you are into this zone, how do I draw that? I don't know. So that's the 50% mark. Okay. So above that, you have discount. If you want to short that further, please wait for price to go back into the discount zone, which is the first half of the leg. Okay? Shorting here is not a good idea. Price is not high enough to short it. Doesn't work, premium. Okay? Do you get that? Okay. So up, I'm still writing this. Okay? So that's the idea. Okay? I hope you understand the idea. And why do I close my trade? Okay, because that's happening, I guess, at a certain level. Okay. And you can do that at whatever scale you want. Look at that. Here, we just, again, swap the liquidity without making a new low. Okay, why not? Maybe you want to go this way. This is my Fibonacci extension. And look where price reacts again. I'm not fooling you, okay? This is not bullshit. See exactly where price reacts. That's completely crazy. Okay? We go into the zone. We go into the zone. We go down out of the zone. Setting the stop loss to the highest level. And targeting the new lows. That's a 2-hour trade. Maybe it's a loss. Maybe it's a loss. And when I'm telling you that always there is a battle, look at that. Oh. We bounce back from this level. So I'm expecting price, if we are still in a downtrend, to make a new low. But guess what here? We bounce already from this level. And you can add confluences to that. You can see, oh yeah, I took this low. I took this liquidity level without making a significant new low. I'm bouncing back from this OTE zone, from this up leg. What would that mean? Okay. There are signals telling you that maybe something is happening, but no, nothing is happening. Okay. That's quite magic, right? Continuing that, and you can see up. So let's sum up, because now we are already at a, yeah, from the initial, so we are risk free. And I can't take it. But from the initial risk position, I'm already taking like 6R. Okay? That's incredible. And who is able to hold a trade this long? Day traders can't. Okay? They can't do that. That's why I'm day trading. I'm not day trading, sorry. So I'm not going more into details on that. I will show you that how do I work both with DIX and Euro, because that's what I end up trading, and this is maybe the most important part of the video. Okay, which corresponds to can I do replay both? Oh, that's awesome. I never did that. Oh, I can do both? You can replay on all charts simultaneously. Click the down arrow and select all charts. Let's do this. I like that. Okay. Okay. So we are exactly doing the same thing here. Okay, new leg. And guess what? I can draw the same on Euro. Okay. what do I see? I see here a configuration where both seems to respect the same thing. I mean that OTE zone, so we get into the zone, we have a huge wick, but we don't care about the wick. Okay, that's the body which tells the story. So there is a huge wick, okay, you can see that, that's cool. And if I get into the zone, that's a nice entry. Okay. So what I see here is the possibility of having this kind of trade and at least targeting this, at least 2.5. So the real position I would take is the one with euro, because brokers at FTMO, for example, don't allow to trade directly the US dollar. So you end up trading euro. And here you have a nice trade, okay, with a high probability trade. And guess what? If I go to the higher time frame, guess what? Is that really the take profits I will put? No, of course not. Because look at that. This is the high, this is the low. I expect price to come at least to the 61% retracement. At least there. Okay? And if I think that the trend is up, I could go higher. So how is the trend? Okay, clearly down. Huh? The trend seems to be clearly down. But I take the low. We never came back into the zone. We never come back into the zone. So I'm updating. Never come back into the zone. We never come back into the zone. Up. And then we just only go back. Guess what? Guess what? This would have been a really nice entry to go up and at least target the 61% retracement. Guess what? Up, out of the zone, and I'm targeting the 61% retracement. 3R. That's a gift. That's a gift. If we continue, okay, let's switch to the euro. Euro is doing this, right? Look at that. Look at that with euro. Where is Fibonacci? This is the top. This is the low. We never come back into the zone. But here we clearly closed above the zone. Okay, but they are not. So this is the correlation I'm trying to show you. So I see price come back into the zone, reacting to the zone and getting out of it. This is clearly a short position that can be opened from anywhere here. Okay, don't take it, yeah, whatever you want, until the 61% Fibonacci zone. This is a win. And guess what? Guess what again? I'm drawing again. As you understood, my main task is to draw Fibonacci levels. Guess what? Are we confirmed into the downtrend? Maybe right, maybe not. We can see a huge wick here coming into the zone and getting out of it. Do you see that? Where are we? Yeah, switch to the 4-hour time frame to have the same on the right and on the left. So here we have the same. When DIX goes up, Euro goes down. Okay, and vice versa. So this is a perfectly good entry. And when I see again that price up reacts into the zone, okay, so this is, I will say, a trade, a win. I'm always drawing the same Fibonacci thing, okay. So what you need to understand is that I always draw my Fibonacci extensions only on DIX. I don't care about Euro. I believe DIX drives the price of Euro. You know, DIX is made of 50% of Euro, right? So when I see that, so price from the 6th of, where we are here, December, I'm not even in the right place, 6th of December, here we are, 6th of December until February, 6th of December until February. I'm trying to align all the charts. Yeah, here we go. Sometimes it doesn't make sense on the Euro chart. And how can I prove that to you? Well, this show you an example. 24 of January. 24 of January. Would have I enter here? So price, I will again play the select bar. Yep. Yep. Here we go. So price up, goes down. Does it bounce from? Yeah, it does. Okay. We saw that we came into the zone. We touched that. And we went up again. You can see break of structure, blah, blah, anything. Okay. You can select your entry. And on the Euro, if I would have done the same thing, here it works because I'm exactly into the zone. Okay, I see wicks, and here it's a good signal to go. Okay, so I would definitely here take the short position on Euro and at least target the, what I say, the 61% retracement of the next leg. This is the 2-hour trade. Okay, let's go rapidly. Okay, that's a loss. I don't care. We still didn't went directly. Okay, we touched the thing. Okay, if you have the doubt, don't worry, it's just a loss. Okay, here the thing is exactly the same. We went down into the zone and we went out of it. I'm starting again the same trade. That's the same trade idea. Okay, but I'm doing this again, targeting the same. That's a 3-hour trade. Okay, and guess what? While I'm here, I'm in profit. Am I now risk-free? The answer is not, because price could still come back into the OTE zone. Where is the OTE zone? Is somewhere here, somewhere really close to my entry point. Okay, I can't go here break even because I could be stopped, right? So no, I'm not doing that. Okay. Okay. We just ended up here with a huge gap, and effectively we would have closed here for a win. Okay. So I want to show you now an example of when things don't work and are not really easy to understand on Euro chart. Okay guys, let's do this. 50-minute time frame, recent DIX Euro analysis. Look at that. I have my low, I have my high. Where does price go? Bounces back from this and we go higher. Seems cool, right? Why? You can't understand Euro. Look at that. If you were to do exactly the same on Euro, this is what you have done. What you have had done. Yeah. You can see that here we clearly maintain the OTE zone, but here we don't. Does that mean that the trend is over? The answer is no. Is no, because DIX always is more important than Euro. Okay, so when I see that, I will definitely get short in Euro. Okay, we went, so the candle is this one. We went out of the zone. So if I were to write the position, would be something like this. Okay, and going higher, for example. Okay, on Euro, the same candle, this candle is this one. And I already see you saying, oh no, you know what? We have, I don't know, equal highs here. The liquidity level will be taken before it goes lower. Look at that, we missed this liquidity level here. No, and did you see we reacted to this fair value gap here? No, your entry is completely stupid, right? If I stay at this level, okay? Your entry is completely stupid. If I take, this, okay? Okay, you can tell me I'm stupid, but I say I don't care. I'm basing all my analysis on DIX. DIX tell me that this is coherent, okay? Euro doesn't. I don't care, okay? This doesn't make sense on Euro based on my Fibonacci here close above the 79% mark. It doesn't make sense because I'm here dealing with a fair value gap. Which am I reacting to? Okay, I didn't do here an inverse fair value gap. What the fuck is this position? And I'm telling you, I don't care, right? Look at what happens. Oh, what a surprise. What happened again? I drive here, I draw the low, the high, okay? I draw the low, the high, and this time I can see a reaction to my OTE level, okay? And not on DIX because it's not reached. Okay, do you get what I've been saying? Is that everything relies on DIX. Everything is about DIX. And here is a win. I don't know many people who went short at this level, okay? Because there are plenty of other things telling you that no, based on Euro and on ICT, you can't do that. Of course I can. I can do whatever I want, okay? But this is very clean on the DIX again. Everything is always cleaner on the DIX. So wherever you trade Euro, you will enhance your entries and your profitability, from my view, if you work with the dollar index, right? So this was an example I wanted to show you, telling you that DIX always is telling you when to enter and what to do on euro, on whatever time frame you want. Okay, I talked about higher time frame analysis. Guess what? Let's go to the weekly, because why not? Yeah, the problem I have now is that I always see Fibonacci levels everywhere. Look at that. The high to the low. Where in the world are we right now? Guess what? Okay. That's a possibility. Or at least, as I told you, until the Fibonacci here. Right? So this is the macro level. We went into there, we reacted twice. There are 2 weeks here and here, telling us to go lower. Okay, so maybe the next stop is 104. And if you do the same with euro, guess what? Doesn't work so well. Because why? Why is that? Because we closed below the Fibonacci extension. But I don't care. Below the 79 mark. I don't care. DIX has the truth. That's my belief on how these assets move. Okay, you may agree, you may not agree. I don't care. This is what I do, right? It's not always a win. Okay, if let's say I'm trading the weekly. Okay, I'm trading the weekly and I see price action doing this on the leg. Let's remove everything again. Let's clear the charts. We need to have clear things in mind. Take the low, take the high. Guess what? Where the price reacts? Exactly into the zone. What are we targeting? The 69, the 61% retracement. Okay. So when I see that, anywhere here to the 60, okay, so this is on a weekly, so the risk reward ratio is low, but when you see that on the weekly you react into the zone, on euro, what's the matter? From the high to the low, so here it matches. Okay, there it matches because we go into the zone and then we go out. Okay, so that's fine. But once we have that, the more interesting thing is, okay, how do I enter in my lower time frame, which is the 4-hour time frame? So sorry. Yeah, we are here. Okay. So I'm expecting here to have a reversal. So just as a reminder, here we are. And here you can use plenty of ICT things you want. Okay, we are into the zone. Guess what? We took that liquidity level, but we are reacted immediately to that. We can say that. We can see that with futures, which is up. The same here. And now on the 4-hour time frame, whatever DIX does, it went really, so I can say that after a break of structure, I can enter up. Where is DIX? Okay, I want this to go up. Okay, if it goes, it doesn't want, I don't care. I'm looking to enter short on euro and long on DIX. Oh, I like this. I like this. Okay. I like this. This week, let's see how price reacts to, I don't know, this, for example, fair value gap. Not yet. Okay. We have another fair value gap here. Why not? Why not with a gap? Oh, look at that. Good entry. I'm taking my entry here on DIX. I'm taking my entry. So the real entry always is on euro. Okay. So up, I'm setting my thing. Okay. And according to my weekly analysis, we should go at least to the 61.5% retracement of this. So at least here. That's a 4-hour trade. Okay. That's a 4-hour trade. So let's do this. I might get a loss, but I don't care. Up. Please, 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 please don't go too fast. Don't go too fast because I'm always drawing my Fibonacci extension. Am I risk-free? Not yet. Not yet because I have my Fibonacci OTE zone here. I'm not risk-free. Am I risk-free now? Not yet. Oops. Where is the rectangle? Okay. Yeah. Am I risk-free now? No. I'm not. I'm not. Okay. Let's go a bit faster with the daily. What's happening on euro? I don't know. What happened? No, okay, everything is fine. Oh. Max available is 4 hours. Why is that? No, I want to go to the daily. I said, yeah. So let's move. Let's move. Let's move. Let's move. Oh my God. Here is the Fibonacci extension. Am I risk-free? Not yet. Not yet. Not yet. And guess what? I take another Fibonacci extension. What do I see? Oh, I have here. So I'm removing this. Oh, I see an uptrend. Okay. I see a fair value gap within the zone. This could be a nice way to do this. To go there. But I don't care. I don't care if price retraces. It happens that it doesn't. Okay. Okay, that's a win. That's a win. Okay. That's a win. So I hold my position like 1 month. Okay, but I don't care. I'm here for the long term. Am I willing to wait 1 month to have a 4-hour trade? The answer is yes. Of course I am. Of course I am. Okay, I talked about DIX a lot and Euro a lot. I believe this is exactly the same how it works for other other assets. Okay, you can take gold and you can do exactly the same. And you will see that waiting is extraordinary, is a power incredible. This is the low, up, this is the high. Am I buying here after this week? No, we are not into discount levels for buying onto this leg. Okay, it's already too expensive. But what? Price continues to go up, but I don't really care. I keep updating my Fibonacci extension until, okay, here we bounce from the 50% mark. Is it a good entry? Perhaps, in my opinion, not. So I'm continuing until this high. But now guess what? Guess what? After maybe 1 year waiting for this, from November 2022 to November 2023, look exactly where price is bouncing back from the fucking OTE zone. You are right. You are right. And now you go to the lower time frame and you just find an entry. Let's make a replay here, for example. So here I said in the 4 hour. So what is here possibly a good inverse entry? Okay, we had many lows being swept. You can use ACT, but only for lower time frame entries. It might help you. Okay, I can see here an inverse fair value gap. Okay, I took again the low. That's fine. And boom, price shoots up. I don't care, I'm entering this. Why? Because I'm in the OTE zone. And what do I target? Look at this beautiful entry. Look at this beautiful entry. And what am I targeting? At least the at least the 61%. That's nearly an 8-hour trade. And if I think we are in an uptrend, I can even go to the real top. Am I ready to wait 1 year for this setup? That's the fucking question you need to ask yourself for a 14-hour. Okay? That's amazing. That's amazing. Okay? And you can see that with the recent events, of course, we are in an uptrend in gold, and of course, we reached that. Blah, 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 blah. Oh no! Oh no! What is happening again? Am I being destroyed on that? Look at that. I was here. Yeah, nice thing. Always draw the Fibonacci extension. Price can come back until there. I can lose like 2/3 of my virtual gains from the very top, but I don't care. And guess what? We are close to the OTE zone. That's why we are bouncing back. But if the trend is really up, we will go back here and maybe add another entry. Okay, we didn't have to. We didn't have to. Let's update the zone. Sorry. Where is my rectangle? Here. Price. Okay, okay, okay. We don't do anything. Okay. That's fine. You know what? That's fine. Puff! Puff! Am I really ready to wait from October 2023 to March 2024 to make a 14? I just did that, but that's more than 10-hour gain. That's the power of swing trading, guys. Okay? You want to have something with NQ, which is the Nasdaq? We can have a look. Where are we with Nasdaq? You can see playing with Nasdaq is more difficult because you might get into the zone a bit higher, but you can always try to find some explanations with that. So here on the 4 hour, okay, so we made not really a new low here, so that might turn into question the really low trend. For a long time we have been in the OTE zone, okay. We didn't make much movement until price, okay, really did take something, and then we went back, okay. So this would have been really a possible trade. Targeting the low 2R, okay, that's a possible trade. A trade that would have been a loss is probably when I see, okay, price going up a week, getting out of it. I will definitely take this trade, okay. And I can see that I get stopped and targeting the opposite level, okay, or even the 61% retracement if I'm shy, but I'm not shy. This would have been a win, 2R win, okay. This is a low risk, really high probability trade from one OTE zone to the next one, okay. That's or if I targeted the opposite, I would have been stopped with this liquidity sweep here. That's fine, that's a loss, don't care, it happens. It happens. Yeah, so that's what happens with Nasdaq. Nasdaq so is more difficult to read, but trend following is extremely powerful, especially in the upside. That's why I say that 50% is enough. When I see price going here, okay, for example, you see that this week would have, this is the 50% mark, this would have been a nice entry to enter a long on Nasdaq, okay, and to hold it because Nasdaq tends to go high because of inflation and everything. So that's another belief. Stock market is going to infinity because we are going to print again trillions of dollars and euros, and inflation is going to kill us all. But we have trading, right? We have trading. Look at that power. I entered here. I'm drawing the Fibonacci retracement. Again, we went back to the 50% mark. Just as a recall, I'm already into a position. I have seen 13R, and now I see only half of it. I've lost half of my retracement of my virtual max gain. I don't care. I don't care. I'm riding this. And this is, of course, an excellent entry. Either after the inverse fair value gap or just because we touched the 50% mark and immediately went away. Okay, I could add something here, add a position, I mean. Okay, so now I'm 2 position in, okay, and let's go to infinity, right? So that's how I come into the US equities indexes, right? You can apply that to any other asset. I won't go into all of them. Crude oil is really funny. Okay, look at that, the daily. I didn't do anything. Take the low, take the high. This is not the low. Please, please, don't be. Look at that. And again, look at that. Look at that. Am I joking? I'm not. We didn't close below the 79% mark. Here is also a great entry. We always have great entries. Look at that. Look at that. There is no ICT things here in this zone to enter that. There are no fair value gaps. There are no anything. Just same price action retraces back to OTE. And then if the trend continues, we go up. Okay? Look at that. That's totally crazy. I'm on the daily here. Okay? It also works on the downtrend. But the same. Downtrend. Do your shit. Look at that. Look at this week. Here, we just touched the 60% one and we went away immediately. Let's continue to write this. Okay, switching to higher time frame to show you that I'm not bullshitting right now. Okay, you can do whatever you want. Oh, that's, yeah, 2020 when price went negative. That's a real joke. That's a real joke. Yeah, I believe it was a joke. Okay, but if you take whatever price one, so oil is a bit specific because it tends to stay, at least for the past years, between 60 and 80. Okay, in fact, here we have more than institutions. We have governments playing here and controlling the price in order to keep it into some kind of range. Okay, you can clearly see that there are ranges here. There are ranges, right? You can see them. There are ranges. So I'm really careful when I go with oil because of these ranges that can last a few years. Okay. That's because price is controlled. Okay, there is no crazy shit about that. Good. So once I told you everything, I think we are done. I'm going to stop talking now. I'm sorry for the video being this long, but I will cut some of the parts. And I hope this would help you. From now on, I will make daily reviews and to share with anyone the real positions I take on my live accounts with a short live YouTube every day. Okay, that's all for me. I hope you enjoyed the video. And don't hesitate to follow me on X and have a good day. Bye bye.